Gentlemen, hello and welcome to another episode of Cautious Trader. Today I just wanted to go over, as we head into the weekend, the dollar index. And the dollar index, for those of you who don't know what it is, essentially shows the strength of the dollar in relationship to other currency pairs, but in general. Essentially, the higher this index is, the higher values on this index are, the stronger of a dollar we have, and the lower they get, the weaker the dollar gets. And as you see, the dollar index has been pretty much at a 2-year low since April of 2018. February to April of 2018 was when we saw the dollar index under the 90 level or thereabouts. But for the past, I guess, year or so that the dollar has been decreasing, what we've seen is the RSI also has been decreasing, right? But what we saw here was that around uh, December, the RSI hit a new low, and the low that it formed, since then the dollar has been basically going sideways. It went a little bit lower, but the RSI has been increasing. And this is important because as you increase the buying pressure, but your price is not really moving, or it's moving sideways, or even if it's dropping, that shows that a reversal, a potential reversal, is in sight. And what is also important to note is that since the yield curves have been uh, increasing, this has prompted the US dollar to be more favored, and people are seeking it. And as money flows from the equities out and into bonds, people uh, need more US dollar at disposal, and essentially the increased demand for the US dollar will push US dollar up. And since last time I talked to you and we covered USD CAD has had a massive jump from the bottom that it formed last time I mentioned, from the bottom that it formed at 124.7, it has risen all the way to 127.7, and this is significant. Of course, I mentioned that it's probably gonna retest this purple line and head back lower. That I was wrong about, and I usually like to bring these about, not just because I learn from them, but also because you learn from them. And again, it's a reminder not to trade with whatever I discuss here. None of this is financial advice. Here's your official disclaimer. This is for entertainment and education purposes only. And with that said, let's go into gold. And gold is always interesting to see in relation to US dollar. As US dollar strengthens, we see a direct inverse relationship with gold. And again, we've seen that gold has broken below its support line at 1774, and it's heading lower to the 1694 level, which was a support level back around June of 2020. Now, with gold, why is it that gold drops when the US dollar increases? Essentially, you have to view it from the investor perspective. And gold is a speculative asset. So when investors move their money out from risky asset classes and speculative asset classes and into things that actually pay a yield or give back a yield, such as bonds, then all these speculative assets drop. And to some extent, this is to be expected of gold, and this is a major drop, as you can see. Let's just have a look at Bitcoin as well. Bitcoin is, of course, a 24/7 market. And since last time we talked about it, it's been going sideways more or less, but what is important to note is that it's been getting rejected by the EMA ribbons that we have here. If you imagine, the EMA ribbons essentially work like a car's shock system, and every time the price reaches it, it will compress the EMA ribbons and then bounce back away from them. Okay, every once in a while it breaks through the EMA ribbons either to the downside or to the upside, but that only happens when there is large volume behind a specific move. As we can see, the volume here was very large. It broke through the EMA ribbons. The EMA ribbon tried to hold the price up, but it was an attempt in futility and we dropped lower. Right now it's testing this moving average here, the 50 candlestick moving average. And if this fails, as I mentioned before, we will head lower to the $42,000 range or the $41,000 range. And that's where we're going to see major support again. Okay, this week coming up, I will be doing a review, not a review, actually a tutorial first. We do the review later maybe, of Wealthsimple. I know a lot of my friends here in Canada have questions about that and how it works, etc. I will be giving them a small little guide to how it works and basically whether or not you should start using it. So look forward to that, and it's going to be primarily Wealthsimple. We won't be looking at any charts, so don't worry about it if you're not into charts. Anyways, thank you so much for listening to me tonight and have a lovely weekend ahead of you. Bye for now.